Good afternoon, everyone, and thank you for joining us this afternoon. My name is Michael Browne. I'm head of commodities at Barchart, and I'm joined this afternoon by Darin Newsom, president of Darin Newsom Analysis. We're going to start today with a market update from Darin, and then we'll move over to a live demo of our new mapping technology and content within CommodityView. And when we're finished with that, we'll have time for questions and answers on either part of the demonstration today, of the discussion. So with that, I will turn it over to Darin, and we'll get started. Darin?
All right, thank you, Michael. And as you can see, while Michael is technically savvy and obviously because he handles that part of it, I am not. So I am coming to you through audio only today, but I do appreciate you joining us, and I do look forward to this conversation. There's a lot going on. There's been a lot going on just today, and so I know I'm going to touch on all the markets here, or the grain markets, very quickly. Just to give a brief overview and outlook, and then again, I look forward to your questions. I look forward to the discussions that we'll have at the end of this webinar. So, without further ado, we are going to get into. If I can get the pages to change here for me. Michael, I just lost the ability to change pages. So
hit page down, Darin?
Yeah, that's what I'm doing. Yeah, it was just working, and now it is not. For some reason, I am not working at all here. So, Mike, let's see what I can do here.
No, hit.
I apologize to everybody.
Oh, there you go.
Here we go. Now I've got it. Okay. That aside, I will not sing you the song Some Summertime, but that is exactly what we are in. As of June 1st, we have crossed over into meteorological summer, and it's always the most explosive, most volatile time for the grain markets. So, summertime. What's ahead for us over the next 3 months? Now, I know we're going to be doing this every month, so I really want to look at, kind of take a snapshot here of where we are at the very beginning of some summertime, the good old summertime. A spring to remember. Obviously, globally, COVID-19, the coronavirus, running rampant across the globe. It affected markets far and wide. We saw things this spring that we never thought possible. The one that jumps to mind is negative commodities, when we saw crude oil go to minus $40 per barrel. Just incredible things, historic things that will probably, I'm not going to say never will happen again, because I learned to not use absolutes when it comes to commodities. But the COVID-19 situation this past spring, it's going to be difficult, at least in my mind right now, to duplicate it sometime down the road. Again, we saw a global economic shutdown. We saw increased tensions. Who would have thought it was possible? But we saw increased tensions between the United States and China. January's phase one deal, it's on life support, particularly with what we heard coming into this week. That seems to have changed a bit, but it's on life support. Everyone wants to kind of bury this thing. U.S. ag markets were disrupted. Livestock processing plants were shut down. Ethanol plants were closed. And again, commodities proved that less than zero is indeed possible. We saw spot crude oil fall to minus $40 on April 20th, just as the May contract was expiring. Again, it was a spring to remember, things that we may not ever see happen again. So from a spring to remember to a summer of unknowns. First and foremost, will baseball be back? Of course, we have to touch on the most important things first. Will baseball be back? As I'm sitting here on June 4th, I'm having my doubts that we will ever see. I know we won't see baseball back in the way that it was. But I had a question with another with a friend this morning. We may not see baseball back at all, not just this year, but who knows what down the road? Who knows what form it'll take down the road? So that's the important thing, is baseball. But if we want to talk about markets, June 1, just this week, just as we started this week, this quarter, this month, news reports of China, quote, asking state-owned firms to halt purchases of soybeans import from the United States. This isn't going to happen entirely. China can't have a hungry populace. And we've seen what's happened the first 4 days of this week, the first 4 days of this month, and this quarter. We've seen announcements of new sales of soybeans to China each and every day. So it was nice headlines. It was interesting headlines, certainly made for a lot of talking points coming into Monday. But again, it's just not likely to happen. We are still a secondary supplier. But given that, soybean exports are nowhere near projections. Nowhere near. We're a couple hundred million bushels short. At least the latest projections that I used, talked about this morning, following the latest release of the weekly export sales and shipments. Still 150, 200 million bushels short at least. And if I go back and do my calculations and look at my analysis after the March 31st quarterly stocks, which are smart stocks on hand as of Q1, as of March 1, it was still possible that we could see ending stocks of U.S. soybeans greater than 1 billion bushels. 1 billion bushels. This is where we were last year. This is what we were talking about last year, was huge stocks of U.S. soybeans. My calculation of corn stocks to use is much smaller, still much smaller than USDA's reports are showing. And as far as winter wheat goes, harvest is just getting rolling. It's getting hot. It's summer-like now across the southern plains. We're seeing some combines starting to roll. So we've got that to deal with in the winter wheat markets. Now, here's the pace projections that I was talking about that I post on the website every week. And what it's showing me right now is that, at least, if we go back over the last quarter, over the last 3 to 4 months, you'll notice that we're right around that 1.5 mark. And what I'm looking at here is the green line. That isn't how many we've shipped. That's if we take the total shipments to this point of the marketing year. And the most recent update released this morning was May 28th. This chart shows for May 21st. So through May 28th now, the pace projection, given the fact that we've usually shipped about 87% of what turns out to be total shipments, we are looking at a pace that would project roughly 1.5, just a little over 1.5 billion bushels. This is well below last year's 1.72 billion bushels. So again, almost 200 million bushels less than what reportedly was shipped last year. In USDA's latest supply and demand report, they pegged shipments. They dropped at 100 million bushels. They were up above 1.7, almost 1.8. Now they're at 1.675. We're on pace to ship 1.5 billion bushels. We're going to have to see extraordinary business, extraordinary shipments done over the last quarter of the 2019-20 marketing year. But it's not all just shipments. Yes, shipments, okay, they're saying shipments are projecting 1.5 billion bushels or so, give or take 25, 30 million bushels, somewhere in there. But here's the real issue. And it's been the issue up until, again, this week, when, as I said, we've seen the first 4 days we've had new sales announced. But up through that time, we're running about 9%, 9 to 10% less as far as total sales, and that's outstanding sales. In other words, sales that we've made, that the U.S. has made that has not been shipped, plus the total shipment number. We're running about 9% less than we were at the same time last year. And if we look at what total sales and shipments are for 2019-20, it's 1.55 billion bushels. Now again, 1.55 billion bushels. What is our pace projecting? about 1.5 to 1 point, as of this morning, about 1.5, 1.525, so 1.5 and a quarter, somewhere near. So it's just showing us the combination of outstanding sales and shipments. We're probably going to be in that 1.5, 1.55. If we don't, out of those net total sales, if we don't ship all those, then all of a sudden we're either going to have to see cancellations or possibly rolling some of those sales to the next marketing year. And so what that does is it reduces sales of new crop soybeans. So I'm thinking right now that we are starting to see the pace pick up a little bit. Again, Brazil has had an incredible run of their exports over the last number of months. They're probably going to start getting tight on soybeans. And so we're starting to see some things happen in the currencies, but just from a point blank available supplies, it looks like the U.S. could have a better fourth quarter than we've seen over the first three quarters, and that could push our shipments a little bit. The problem's going to be we have to still see sales. We have to see more than the 2 million bushels that came in this morning. Most of the sales activity that we have seen is for new crop, and I find that interesting. It's not old crop. We're not really bumping up our old crop numbers all that much. So I think this is going to continue to be a problem. I don't care about the phase one deal. As I said, it's on life support. Nobody wants to see it live anymore. One side's mad at the other says it's not going to do something, this, that, and everything else, round and round and round we go. China will buy what it needs from the United States as a secondary supplier. That's all we are, is a secondary supplier. That's not going to change anytime soon. But we could see better shipments and maybe some sales made here over the fourth quarter of 2019-20. As far as this is a fun chart, isn't it? This is what I look at all the time. And this is what I posted at the end of May. And the Commodity National Soybean Price Index, what I view as the intrinsic value of the market. These indexes are invaluable. To me, they are the intrinsic value of the market. Was still in a strong downtrend. If you want to see the black line, that's the black line. Still in a strong downtrend. And given what we've seen, it was still projecting to lose about another 50 cents through possibly this coming summer, early fall, August, September. Now, what we've seen this week, 20 to 30 cent rally. Does it change my chart all that much? No, but it certainly could start the process of bringing the long-term downtrend that I see here to an end. This is the monthly chart, long-term trend. So I need to watch it closely. We're only in the first 4 days of a new month. I still see a downtrend. I still see a downside target about 50 cents lower. But if we start to make more sales, if we start to make more shipments and basis stay strong, then we could actually be nearing a low. So certainly a lot to watch with the Commodity National Soybean Price Index. Again, the intrinsic value of the market. Corn stocks to use. To me, this is telling in the fact that my numbers, or my monthly numbers, or the blue columns, continue to run well below, and this is stocks to use. So this takes ending stocks and divides it by total demand. The interesting thing is we have no idea what stocks are. We have no idea what any of the actual numbers are, but we can kind of put together a formula that tells us, by using the Commodity National Corn Price Index, that tells us that implies to us what stocks to use are. And what I'm looking at right now is that my calculation at the end of May for stocks to use for corn, domestic corn, the blue column came in at 12.6. In USDA's May report, it was up at 15.2. Huge difference. The cash market, the weighted national average cash price, which is what the Commodity National Corn Price is, weighted national average, is not indicating that we have a supply-demand situation that results in a 15.2 ending stocks to use. It's not there. If we go back to my analysis at the end of the quarterly stocks reports, which are the green columns, when the March report was released at the end of March for March 1, which is the green column at the end of February, my calculation was 12.3. So My calculations using not only USDA's own numbers, but the Commodity National Corn Price Index hasn't changed all that much, whereas USDA's numbers are jumping all over the place. So I think the consistency is showing here we do not have the supplies on hand. We don't know what demand is. We don't know what total supplies are, but our ending stocks are not going to be, at least all the indicators out there, the ending stocks of domestic corn 2019-20 are not as large as what's being reported, it's being talked about right now. Would this be something unusual? Absolutely not. Again, if I use the NCPI and I look at the daily marketing year average, what we see is over the last 4 marketing years, actually the last 3 marketing years going into this one, the 16, 17, 17, 18, 18, 19, USDA has overstated stocks. That's the dots over on the far right-hand side, along with this year's red dot, compared to what the NCPI, which is along the trend line, but this is what the NCPI is indicating the actual stocks to use situation to be. So we have found ourselves in a pattern where USDA is consistently overestimating ending stocks versus demand, versus total demand, meaning stocks to use are way out of line. The cash market, the intrinsic value, again, the intrinsic value of the market is telling us we have a far different situation, that we don't have as much of a bumper, as much of a buffer as what USDA reports are telling us. Now, notice the 2013-14, that was actually, we were just coming out of a 3-year drought. And so USDA actually underestimated stocks at that point. We actually built up our stocks in the 13-14. Now there's 2 little green dots within that mess of colored dots, clear off to the right-hand side, 14-15 and 15-16, right on the line that's been established by the NCPI. So I find it interesting. 13-14 was the last time USDA underestimated, 2 years basically being right on target, and then the last 4 years USDA has grossly overestimated stocks. But we can keep an eye on what's going on because we have the NCPI at our disposal. What do I see in the cash in the cash corn market, in the National Corn Price Index on its monthly chart? Well, I like the way this chart looks. It looks to me like we've come down. We've finished off a 3-wave long-term downtrend here in April 2020, followed up with the inside month in May. To me, it looks like we have put in a low. We've put in a long-term bottom in the cash market, in the intrinsic value of corn. Do I think that we're going to do one of these V-bottom things that's so popular, that's talked about so much on all these financial shows? No, I do not. I think we're going to see more of a U-shape. Corn likes to go sideways. So I think we could go sideways for a while, bounce around, chop around. But eventually, I think we're going to see the corn market go up. Why? Again, I don't think we have the stocks to use, meaning I don't think we have the index stocks that's being talked about. So what about the 3.3 to 4, the 3 billion to 4 billion bushels ending stocks for 2020-21? They don't exist. It's an illusion. It's fantasy. We have no idea what the next crop is. Those that are making the USDA's initial round of guesses in May are just that, strictly guesses. Market's telling us something completely different. For my money, I watch the market. Here's the okay. Now we'll jump from corn over to wheat, winter wheat. As I talked about stocks, cost of carry. These are the tables I pulled from my commodity view system. The left-hand side is Kansas City. Right-hand side is Chicago. And what we see is the carry in the spreads. Like right now, the July SEP carry is 6.5 cents, and that's almost 54% of full commercial carry. And if we go all the way out to the July-May, that's at 33.5 cents, 56, 57%. Going back to my old merchandiser days, I broke it up into a simple, three area chart. Anything 33% or less, I considered bullish. 66% or more, I consider, or 67% or more, I considered bearish. Everything in between is some sort of neutral. So let's jump over to Chicago. Winter wheat harvest is just getting started. Hard red winter is getting rolling. Soft red winter has been delayed a little bit because of all the rains that continue to move through the Midwest. Got another tropical storm moving up. What we see here is we actually have a neutral to bullish situation. July SEP is at 20% full commercial carry. July-May is at 40%. So overall, I'm going to say the wheat's nowhere near as bearish either. We've got reduced acres. We've got the possibility of some production problems across the Midwest because of too much rain. The Southern Plains probably looking at a pretty good harvest, even though we did have reduced acres. The spreads are reflecting harvest is getting started, but yet, as we've seen the last few days, Kansas City wheat's having a nice run. So fundamentally, probably not a lot of room for the market to move up. Probably going to start to see some hedge pressure again on the market. Seasonally, Kansas City wheat tends to put in a high the first week of July. So we've just got a few weeks in here for the market to move a little bit. Then all of a sudden, the weight of the fundamentals will probably start to hit it again. Here's a look at the Commodity National Hard Red Winter Price Index. Again, I like the little uptrend pattern that I see. Looks like we have a target here again for June, July, slightly above where we are now. Get it up into the 460 to 4. No, I know that reaches up almost to $5. That may be a bit of a stretch, but we have seen a couple really nice days this week, really strong days this week. And I think that's going to be the opportunity for producers, for merchandise and everything to get some sales on the books. Because as I said, when we get into that early July time frame, that's usually the seasonal top in the market in both the futures and in the commodity hard red price index. Okay, so for my June outlook, and again, we'll be doing this again next month, so you can check up on me and see how I do. For the June outlook in the corn market, look for the cash old crop to stabilize above the spring lows. Again, I think we've put in our low. I think we're going to sit here for a while. Support could come from a round of non-commercial short covering. This group's holding a net short position of over 200,000, over 220,000 contracts. That's huge. So I think if we see some support this spring or over this next month, it's going to come from the non-commercial side, doing some short covering. New crop could also move sideways over the next month, though an early seasonal weather scare, maybe late June, early July, could be what sparks a bit of a rally in the corn market. Soybeans, I still see a downtrend on the NSPI monthly chart. We continue to see pressure from a continued slowdown in export demand. I will throw a little asterisk on that. The last quarter, including June, could see shipments start to pick up, but the key is going to be sales. Buying enthusiasm in new crop could be limited by ideas of larger beginning stocks. Again, I think ending stocks are a lot larger than what USDA, probably double what USDA is talking about right now. Even though the market, as far as, again, the future spreads don't necessarily back me up on that. And we've got improving early summer weather conditions. In the wheat market, I still see winter markets moving higher in June, despite harvest, with the seasonal top tending to occur in early July. Okay, I'll buzz through a bunch of that very quickly. Again, please write down, please send in your questions. I look forward to your questions. For now, I'm going to turn the podium over to Michael. And so with that, Michael, the stage is yours.
Great, thank you very much, Darin. Let me just pull up my screen here. Okay, we are going to segue over to CommodityView. Some of you already use CommodityView today. For those that don't, CommodityView is a very robust and full-featured commodities desktop solution. It includes quotes, charts, news, weather, and the ability to transact both physical grain and futures, all within a single platform. And it's accompanied by a very powerful Excel add-in to pull real-time data or historical data into Excel and do further analysis there. Today, however, we are going to focus on the new mapping technology that we've incorporated into CommodityView. Very interactive set of maps and very, very deep content that you can apply to those maps. So we're just going to look at some of the examples that are available today. Darin, could you just confirm that my screen is up?
I see your screen, Michael.
Perfect. All right, very good. Excellent. Okay, I want to start with just this first screen here. Our highlights our cash bid information. We collect cash bid prices from about 4,000 elevators across the U.S. and Canada. You can see the Canadian locations above. Within the maps here, the blue dots are individual locations, and the green and yellow dots are aggregations. And those aggregations break down further and further as you zoom in on the map. So if I hit the plus sign, you can see I get more and more individual locations, or I can simply click on a location here, say around Des Moines, and that will automatically zoom in for me and continue to break those down. Once I have individual locations, I can click on that location and see the owner and the location and the current bids that they have out, their basis, and the resulting cash price. I'm going to zoom back out here and show you a couple other features. You can also filter the bid data. So if I want to come down and I want to take a look, say, at just the river terminals, I can sort it down like so. I can also come in and take a look just at ethanol and biofuels. So again, if I zoom in here, I click on a particular location. And there's, for example, Siouxland ethanol. And I can see all of their bids that are currently out there and their basis. I can click on the little charting icon and immediately bring up the historical information on that particular bid. I can also pop back out to the layer management tool here, and maybe I want to overlay those individual prices with our cash bid indexes. So we take all that raw cash data at the 4,000 locations, and we calculate volume-weighted indexes from the county level on up to the national level. Here we're looking at county level corn basis indexes and color-coded according to the legend down in the lower right-hand corner. So a very powerful tool to look at both individual locations and all of their bids, and then also look at the commodity indexes that Darin talked a lot about in his presentation today. I'll pop over to a new tab here, and you can also, if you wish, replace all those individual blue location indicators with actual prices, so you can see price flags, across the country at each of those individual locations. Here we're looking at soybeans for July. You can even pop that out. So you want to look at the new crop bids for November, and take a look at those as well. And so you can, a number of different little features here that you can slice and dice the data in different fashions. There's also, beyond price data, there's all sorts of fundamental data. Our entire commodity stats database that's geographically oriented has been incorporated into the maps here. So here, for example, we are looking at accumulated precipitation, which is part of our crop factors information, which is available both in CommodityView and via API. So here, county by county, we're looking at accumulated precipitation against the legend down in the lower left-hand corner. And some of the other things you can do here is actually overlay pieces of this data with each other. So since I'm looking at accumulated precip right now, let's go ahead and look at the drought monitor. I'll turn the drought monitor on, and I can see the different areas of stress that the crops might be under at this time. And then I can also put on the radar and see if in the near term, any of those areas of stress are going to get some rain. Those real-time radar, the drought monitor, and accumulated precip all on one screen. I can go further and add other layers as well, but I think that's a good example of the different things that you can overlay with each other. There's also a number of the USDA reports that are available via our commodity stats database, again, either in CommodityView or via API, and those have been incorporated in the maps as well. So here we are looking at U.S. corn. We're looking at the progress report for planted progress, and we can animate this. So this is the current planted progress. You can see North Dakota is lagging a little bit here, but pretty much everybody else is done. And if we hit the animation button down in the lower left-hand corner, it goes back to early in the season, and you can see week by week how these numbers have changed in an animated geographical format. Okay, we can also come in and we can look at, let's say emerged. We'll come down here and we'll look at the progress report. You can see there's tons and tons of information here. So if we go to progress and emerged, and we can animate that again. like so. And then we can also change the commodity. So, maybe here we want to look at spring wheat. Again, you can see there's a lot of data available here. Come down to spring wheat, and we'll go ahead and animate that. You can see the current numbers there, but if I animate that, I'll go back to the beginning, and you can see again the progression of spring wheat emergence and where we're at as of the last report. Other examples of the USDA data that's been incorporated here beyond our own proprietary data is crop condition. So here we're looking at the condition excellent for corn. And again, we can see, Minnesota's at 22% in the excellent category, Iowa at 14, Nebraska at 20. And then again, I can animate that and I can see if areas are getting better or worse as the animation moves on through the season. There's also inventory numbers. So here's total inventory state by state for corn. When I come in, I can also look at, let's say we want to look at just off-farm storage or on-farm. So again, very easy to navigate your way around. Go from corn to soybeans, just scroll down. Yeses again. And grab soybeans. And there's the on-farm inventory for soybeans in state by state. New this year are Barchart's proprietary commodity yield forecasts for both corn and soybeans. And you see this is the current estimates. And if I animate that, I can go back and see last year as well and see how that progressed through the year. The first estimate was just released this week. These are updated daily. So as this season progresses, you'll be able to animate that and see day by day, week by week, how those yield forecasts are changing and progressing. Aside from ag, there's also energy data available here. So in this particular tab, we are looking at our refined fuel indexes. And if I click on that layer, you can see we're looking at premium gasoline as of 5/31/2020. And I can just go to my calendar picker there and pick other dates to look at as well. So it's premium gasoline. There's all the other, there's, the blends, biodiesel and ethanol blends, propane, et cetera, et cetera. And then if I wish, I can also come in and overlay on that the actual travel center prices. So the prices at each individual location. Again, these are aggregated locations. As I zoom in, I'm going to get individual. And I can click on an individual location and pop up their current prices for diesel, regular, premium, DEF, et cetera. So it could be very useful for factoring in freight charges or surcharges or adjusting bids according to fuel costs, things like so. Okay, and I want to come down here, and this is kind of a real interesting one, especially over these last few months here. This is active rig counts, so natural gas and crude oil rigs across the U.S. And if I animate this, it's going to go back to June of 2019, and you'll see where we're at, well into the 400s in Texas, 47 in North Dakota, and watch what happens here as we get into spring of 2020. And we'll see where we end up. So you can very easily see the shut-in of all of these rigs as we go on, down to 127 in Texas and 12 rigs in the Dakotas, North Dakota. So beyond ag, there's a ton of other information as well, and you saw just some of in the drop downs there what was available. Okay, and with that, we'll see if we have some questions available. Let me just see here what's come in as we've been talking. Okay, so there's a question that says, if you don't think new crop corn ending stocks are large as USDA is saying, what is the difference between the two of you and why?
Okay, yeah, again, it goes back to the fact we start off with beginning stocks. I think beginning stocks are smaller than what USDA is saying. You know, you go back to that regression chart that I showed, where USDA, according to the correlation that I've built with the NCPI, is that USDA is overstating. So if ending stocks are overstated, that means beginning stocks are overstated. Secondly, the acres are still a huge question. It's very possible, even with USDA's reports, that the May number is the largest acreage number that we see. I'm not saying it's going to automatically fall off or come down, but in time, I think we could see that planted acres number come down. I think there's been a lot of weather issues up in the northern plains, so we might have lost a few. Visiting with some folks up in the Dakotas, we may have lost a couple million acres up there. So, so there's a possibility that we see the acres come down. On top of that, Michael just walked through the yield estimates. Those are going, as he said, those are going to be changing constantly. And so if we get that weather scare, I mean, right now, the first reports that we saw, the first numbers that we saw are just enormous numbers, particularly if you look in Iowa and parts of the heart of the Corn Belt, some big numbers. But if we start to see those come down, obviously that's going to also take away some of the production. So it's a mixture of things. I don't think we have the supplies, and I'm just going to start on the supply side. I don't think we have the supplies, and I think right now the production is still in doubt. And who knows about demand for 2020-21? That's another game entirely that we really don't have any clue yet as to how that might play out.
Okay, excellent, Darin. A couple more that come in here. How does the California court decision Wednesday evening affect the soybean market?
Yeah, that was a big one, and that was one that I just found out found out the details shortly before we started this webinar. I had a customer call in, I had a friend call in, and he's saying, "Did you hear about this? Is this part of the big soybean rally that we've seen?" And what it's saying is that dicamba basically has been outlawed except for dicamba with Syngenta. That was an interesting development, but what it means for 2020 soybean supplies is still a huge gray area. Number one, this is going to be challenged in appeals courts, so it's not locked in stone, set in stone as of yet. But it's interesting that it seemed like the non-commercial side, who already hold a huge non-commercial, huge net long position, seem to be buying today on that headline. There's nothing fundamentally new about the market, particularly new crop, fundamentally changed about new crop. But it seems like the non-commercial side was buying. And I also want to go, so what do we see? I really don't know right now how this is going to play out. I think we're going to see a non-commercial reaction, and the commercial side is going to take its time. Has it changed the overall trend of the market? No. This is one day. This is 1 week. Let's see what happens down the road. But it's certainly something that as growers, we're going to have to pay attention to, get as much information as we can. And as a market analyst, we're going to have to pay very close attention to what this might be, if this starts to change the structure of the market at all.
Okay, excellent. One more. You mentioned soybean spreads not agreeing with you. What did you mean by that, Darin?
Yeah, and it's funny, this ties right in to what I was just talking about with the court ruling, is that I talked about I showed a picture of the wheat spreads where Kansas City was neutral, maybe leaning a little bearish. Chicago wheat is neutral, leaning a little bit bullish. And I also talked about how soybeans, fundamentally, if I look at the USDA quarterly stocks report, we're talking about more than 1 billion bushels ending stocks, where USDA is projecting about 500 million. If I look at the future spreads for soybeans, there is almost no carry, and that is a bullish situation. I can look at the cost of carry table on my commodity view, and we're running in the 15-20% cost of carry as far as old crop July August spread, July SEP. Very tight situation, and what this indicates is that supply and demand is much more bullish than what I see it. And as we go out to new crop, the market has actually been inverted up until the last week or so, when it started to move back into a little bit of a carry. Now, if what I've been saying all along is, we have to pay attention to what the market's telling us, and we don't know the why. We only know the what, and the what was the market was more bullish than what I think it should be. Now we might be starting to find out the why. So again, it's possible that this California court ruling is already being factored in, has already been factored into a certain degree into the new crop spreads. And so why I think that the market doesn't necessarily agree with my view that we're far more bearish, it comes down to the spreads. It always comes down to the spreads. It's the best read we have on fundamentals.
Okay, excellent. One more question just came in, Darin. It says, will the pollination window on corn be short enough to create some concern for the market?
I think so, and maybe it's just because I think that's really the one chance that we have for a summer weather rally that we normally see. We got the crop planted a little bit early, then it turned cool. So now with all of the crop progress studies you just showed, Michael, we'll be able to track. Are we going to be looking at more of an early July pollination? Are we going to be looking at mid-July, which is more normal? Maybe a late July. Last year, what was it, August or September? And so the heat in that time frame is going to be key. Yes, it's supposed to be hot here in June right now. It's not a huge issue. In fact, it's probably beneficial for the crop. But it's as we get towards the latter part of June into, say, early July, if the heat is an issue at that point, when we start to move into a very, as the question asked, into a very small window of pollination, that could be that spark that we finally see kick into this market and give the December contract a bit of a rally.
Okay, excellent. One last question, and this is on the product itself, on Commodity View. And the question was whether any of this data that is in the maps can be charted. And the answer to that is yes. It's all elementized, so it can be pulled into quote boards. It can be linked to charts and charted there historically. It can even be used in seasonal charts, and I have one here to bring up. So for an example, here we're looking at the Iowa corn progress for the planted phase. And you can see here, you can overlay 5, 6, 7, 10 years of planting progress data. And the blue is this season. The green is the average. And you can see how are we progressing this year. And you can do that for any of the stages. So you can do it for, planting, emerged, et cetera, all the way through maturing and harvest. And really keep on top of whether we're staying in sync with the normal progression. Okay, that is all the questions we have.
And Michael, that's an important. Michael.
Mm-hmm.
Michael.
Yes, go ahead.
Michael, that is an important set. That's an important set of studies that you have there, is the ability to show the seasonal time, because I was just talking about, we're running ahead of pace. Well, this is a great picture that shows that. And as we go into emerge, as we go into all of pollination, all of the different stages, the dough and so on, this will be interesting to watch. And when we tie this back to the weather, we tie this back to the rain and subsoil moisture, everything else that we have, then you're going to get a very good picture of what we're facing compared to previous years. Then all of a sudden, is the 175, 180 yield possible that USDA is talking about? Is it going to be bigger? Based on what the Commodity View with Commodity View system shows. It's going to be a fascinating watch as we go about this spring and summer.
Very good. Thanks, Darin. Okay, everyone. Let's see. All right. Thank you very much, everyone. That concludes our presentation for today. Again, really appreciate you all taking the time to join us. I hope you all have a great rest of the day. And again, if you'd like to take a trial of Commodity View, just contact myself or your sales rep. Thank you all very much. Have a good day.